Seeing some movements in the shilling, seems to have held steady against the dollar despite all that we've seen by way of inflows into the dollar in recent weeks. In your view, what's fair value for the Kenyan shilling?
Well, we're looking at between 80 and 81. I think at the moment we are still wondering how the issues of the wheat will affect us. Kenya does not have enough wheat, and we know that Russia has decided not to export, and so we do expect that prices of wheat will go up, and that would probably have some pressure. We also think that there's quite a bit in terms of exports earnings coming in, and so we think that the shilling right now is looking at pressure from both sides, and therefore we expect it to remain steady for now.
All right, let's look at the state of the market in general. Friday, it closed at 4,597 points thereabouts. Today, in the region of 4,588. Experts say, well, you know, it's holiday season in Kenya. There's a bit of a lull. It's really got nothing to do with indigenous factors within Kenya or within Kenyan equities. What's your sense?
Well, I still think the mobile telephony sector wars have had some effect. I think we've seen quite a lot of Safaricom shares being dumped on the market. Well, it's sort of managed to hold steady later on during the day, but we did see it drop by about 5 to 6% earlier in the day. So I think that has an effect on the NSE 20 index being the biggest, the most highly, the one with the highest weight on that. But apart from that, of course, the schools are about to open, so we think investors would look towards that.
All right, you mentioned telecoms, and we do know that Safaricom has come under scrutiny significantly after its rival Zain Kenya announced tariff cuts, and also the regulator putting pressure on all the operators to cut down on their interconnect fees. Many people looking at this stock saying, you know, competition could change the dynamics of Safaricom's market share within Kenya, and what we've seen today is Safaricom shares falling 4.63%. Is this something temporary, or is this a phenomenon to really look out for?
Well, it still depends heavily on how Safaricom reacts to what Zain have done. Zain have just been bought by Bharti Airtel, and this is coming from India, and they have very high economies of scale on their side coming from the Asian giant, and so we do expect that the wars are going to continue. There is a bit of uncertainty as to where Safaricom will head and how they'll react, but until they react, I think there's going to be a bit of downward pressure on their stock.
All right, results out this week, East African Breweries Limited and also KenGen. Market generally expects very good results to come out of the brewers. Why is that?
Well, we've been seeing the financial sector coming out with double-digit growth in profits. So the bottom lines are expected to be growing. Investment is on the up and up. And so we are expecting that most companies are going to show double-digit growth over the first half of the year. We also expect that most companies will be intending to signal investors that things are good, and therefore we do expect quite a few hefty interim dividends to also come out of the results. As we go into the results, the half-year mark, and of course some companies announcing their end of year, we do expect to see that reflect on the fact that we're expecting heightened economic growth this year.
All right, just staying with EABL, how will the consolidation of the East African community through this common market help their cause? Because there have been some issues about their entry into Tanzania, for instance.
Well, that's been a long, drawn-out battle. They have had issues in Tanzania for a long time. And I think that that will probably not end immediately because, of course, there's still a lot of red tape to go through, and hopefully they're going to be able to manage. But they recently bought out one of the larger breweries in Tanzania. I think that was Serengeti, and that is probably going to give them a direct foothold in Tanzania. What I think is that the entry into markets like Sudan is also going to have a very positive effect on their bottom line.
All right, focusing on KenGen also posting results, many experts have said these are some of the companies to look out for because there's such a heavy focus on infrastructure development in Kenya. So utilities and manufacturers are the one to look out for. What are you expecting from KenGen, especially given that Kenya for the longest time was operating on emergency power, and that has really and truly put the writing on the wall for investments that are needed in electricity generation, all sorts of renewable energies as well?
Well, KenGen is servicing an infrastructure bond which they issued at around 12.5%. We've been seeing interest rates go down. So I think that's going to have a bit of pressure on their balance sheet. But on the whole, I think the energy sector is looking at growth over the next maybe 5 to 10 years. And unless and until we actually have enough on our power grid, the KenGen is actually a growth in the growth segment of our forecasts. So right. I think that they will definitely have done well. The energy sector is definitely doing quite well at the moment. But I think the place to watch is how what effect that 12.5% in the face of declining interest rates is actually what effect is having on their balance sheet. And
then finally, Samuel, let's talk about the fixed income market. We know that recently we've seen a lot more subdued activity on bonds in Kenya. Just last week, about 3.3 billion shillings worth of bonds traded, which is quite far down from the 4 billion shillings prior to the referendum. All eyes this week on the results of the 9-year infrastructure bond to be released on Wednesday, the 25th of August. What's your perspective on fixed income markets in Kenya at the moment?
Well, we expect what happened is that the interest rates on the last bond issue went slightly higher, and we've been in steadily declining, we've been seeing steadily declining interest rates, which are normally good for the secondary market because most bonds tend to sell at a premium when interest rates are declining. But what happened is when the investors saw the slight increase in interest rates, they've taken a step back to see what's going to happen with those. And of course, that has had a direct effect in seeing the volumes being traded on the bond market decline. But we do expect in the long run that this increase is not going to be sustained and that the government is just trying to ensure that they can raise enough. But as we go forward, we expect the interest rates to go back into a decline, and that is going to pull more investors back into the market.